So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%.
Wait a minute, this isn't a game. The United States just unleashed a bold move that's rocking the global stage, but China's response might change everything. Stick with us to uncover the truth. Just days ago, U.S. Treasury spokesperson Mark Hensley appeared on a live broadcast and dropped a bombshell. Any nation buying oil from Russia via China will face a 100% tariff, not just China, but everyone. This wasn't just talk. Hensley singled out India, Germany, and even G7 allies, demanding they sever ties with countries outside U.S. influence or pay the price. It's a high-stakes gamble to enforce American economic control, turning trade into a test of loyalty. But is this strategy about to blow up in Washington's face? Let's dig into the details. The U.S. is leaning hard on tariffs, not as an end goal, but as a lever to keep nations aligned with its agenda. Look at Canada. Despite their tight bond, Trump hit them with 30% tariffs on goods. Then came 125% tariffs on Chinese imports, met with Beijing's 10% counter taxes on U.S. products. Now, Hensley's pushing 100% secondary tariffs on any country touching Russian or Iranian oil, aiming to choke China's energy lifeline. On July 23 in Oslo, he met Chinese officials to push a trade deadline extension, but it's clear this is about dominance, not dialogue. Here's the catch: these tariffs are boomeranging. From May 2024 to May 2025, U.S. exports to China tanked 18%, the steepest fall since 2020 disruptions. American exporters are reeling, and consumers are footing the bill for imported goods. Hensley's global squeeze might sound tough, but it's already hurting the U.S. more than its targets. And the world isn't jumping to obey. Countries are eyeing alternatives. While Washington flexes with threats, China played a different card. No press conferences, just action. On July 26, Beijing activated a network of 5 colossal hydroelectric dams in Yunnan, pumping over 300 billion megawatt-hours into its grid. That's more clean energy than Spain generates annually from a single initiative, the U.S. It hasn't launched a megaproject like this in decades. Its last big dam, the Hoover, pales in comparison at just 2 gigawatts. This isn't random timing. China's new dams, part of the ambitious Lancang River project, signal self-sufficiency. Estimated at $170 billion, it's set to finish by the early 2030s, outpacing anything the U.S. has planned. The message: you can't starve us of power, we're building it ourselves. This move dismantles Washington's energy chokehold plan, proving China's rise as an energy titan with water, solar, and scale. The impact is global. Nations reliant on dollar-based oil are hedging. Gold prices spiked to $2,620 per ounce this week, and Bitcoin's buzzing. The IMF cautions that a coordinated sell-off could rattle debt markets, while India and Southeast Asia fret over downstream water control from the Lancang dams. China insists it's for green energy, but the geopolitical chess game is heating up. Contrast this with the U.S. no new dams, no infrastructure leaps, just sanctions and rhetoric. Recent infrastructure bills boast big numbers, but none match China's scale. Analyst Laura Klein noted, America's talking climate goals, but China's delivering kilowatts. This gap is widening, and Washington's threats feel hollow without tangible progress. Here's the kicker. After tensions with Iran flared in June 2025, Trump quietly urged China to boost Iranian oil purchases to stabilize prices. China obliged, buying 1.9 million barrels daily through private refineries, dropping global oil costs by 5% in a day. Once a U.S. foe, Iran's oil now hinges on China's market muscle, a shift that undercuts American leverage. China isn't flexing with force, it's winning with markets and infrastructure. The Lancang project, alongside oil deals, boosts global steel and construction stocks. U.S. policy statements: they barely move the needle anymore. Beijing's steady hand is reshaping economic stability, while Washington scrambles. So, what's this mean? If you're in the U.S., expect rising costs. Imports will sting, and loan rates may climb. Investors, keep an eye on bonds and gold outside the U.S. Diversify now, currency shifts are coming. The world's changing, and awareness is your best defense. As of July 28, 2025, to 30 p.m. CEST, China's energy surge has markets buzzing. The Langkang Dam's output hit 50 billion megawatt-hours this month, while U.S. yields climbed to 5.3%. Reuters reports BRICS nations are eyeing a currency basket system by 2026, challenging the dollar. This isn't just trade, it's a power shift. China's building the future. The U.S. is stuck in the past. If Washington doesn't adapt with bold projects, its influence could fade. The world sees it. China's not just rising, it's redefining the game. What do you think, is this China's rise or America's decline? Share your views below, hit like if this opened your eyes, and subscribe for more deep dives. This story's just beginning. See you next time.